All right, looks like we're rolling. We are live. Mr. Brook Day, how are you doing, sir?
Good afternoon, Brandon. I'm well, thank you.
Right
Excited to
on.
be back on Momentum Monday post-campaign.
Yeah, it's good to be back in the saddle. Feels good.
It
Um,
does. Um, with the realization that once you enter into politics, these types of shows, you have to be very careful what you say.
yeah.
Comes with it. There's a lot of responsibility placed on your words.
Hmm.
Most of it is just so that you can minimize how much social media trolling you get. Um, instead of replying to Facebook comments at dinner time. It'd be nice to eat with your family once more.
I know.
Yeah, excited to be back post campaign, a little bit out of the limelight, and to talk about a really important issue
Mm,
that happened this, or not issue, but event that happened this week,
right.
and sort of peel it back and try to figure out what's going on.
Yeah. So yeah, like Brooke just alluded to the big issue, and I'm not even going to try to describe what it is because I don't want to undersell it or oversell it because I honestly don't understand this subject too well. But this has to do primarily with the company FTX. So you want to describe to us what FTX is and what's going
Right.
on?
So the first thing that I want to say is that FTX is not a crypto coin. Well, it is, but primarily what they are is they're a central exchange. So FTX, Coinbase, Binance, these are all centralized exchanges where crypto tokens get traded, crypto assets get traded, crypto coins get traded.
Right.
These are entities that are exactly like we see in New York at the New York Stock Exchange and the NASDAQ,
Mm,
as well as in Chicago with the Chicago Mercantile Exchange. The only difference between FTX and those other brands that I mentioned is what they trade.
right.
Chicago, they trade commodities.
Hmm.
New York Stock Exchange generally, brick and mortar, energy, uh, big American companies, small American companies, and of course Nasdaq is a tech listing.
Right.
So just think about FTX and Binance and all these other places as places where crypto gets listed.
Okay.
They're they're really part of traditional finance.
Okay.
Yeah.
So that
Now the distinction that FTX has, like all crypto, they have their own coin. So they issue their own sort of loyalty coin. So let's just break it down like this. You're a credit card user, correct? Like we
correct.
all are these days. Credit cards have loyalty points, right? So let's say you've got a MasterCard or a Visa, you get Visa coin, right?
Mm,
And the more you use Visa, the more Visa coin you collect.
mm,
Well, FTX does something uh, called issuing their own coin, and it's called FTT.
mm.
And that FTT allows users of their exchange to be able to get cheaper trading fees because on exchanges, Brandon, exchanges make money on fees.
Right.
So if I want to trade, let's say I want to trade IBM stock for US dollars and I want to trade that pair, they'd facilitate that trade on your behalf. And by doing so, they take a fee.
Mm,
So what FTX does, and this happens a lot in cryptocurrency, it happens on Binance with their BNB coin, is they facilitate trades and they offer you the usage of their coin so you can get a lower fee.
okay.
Yeah.
Gotcha. So what was the big moment that happened last week? Like what caused this kind of shift to this ultimate crash essentially with
Yes, so
FTX?
we don't bury the lead. There was it all started about a week and a half ago.
Right.
There was a tweet that came out from CoinDesk, which is primarily one of the largest voices within the crypto community. If
Mm,
anything, it's the most, I guess you could say, centralized, regulated, not regulated, but it's an authoritative voice
right.
in crypto. And they put out a tweet discussing the balance sheet of Alameda Research and FTX. Now, I'll get into Alameda Research in a minute, but let's just stay on the FTX brand so people don't get confused.
Hmm.
And there was some eyebrows raised, because you got to remember the people who are inside crypto are very sharp and they see things very quickly. Um, there was an eyebrow raised as far as their balance sheet.
Hmm.
And that led to a series of events where CZ, who's the owner of Binance, and some say the richest man in crypto now, especially, he basically tweeted that they're going to be selling their FTT, which is the stablecoin token within FTX.
Hmm.
By liquidating that, it created a fear in the market that FTX was insolvent and they didn't have enough money to meet obligations.
Right.
So between those two events, those two tweets, you had a situation where FTX was proven to be insolvent, and then we find out a week later that a lot more was going on under the hood,
Hmm.
right? So those are the two things that sort of got the dominoes going. Where a major brand like FTX, and some would say it was probably the biggest name in America besides Coinbase, because Coinbase is an IPO company, a publicly traded company, and FTX isn't. But FTX has their name on the Miami, well, they did have their name on the Miami Heat arena. They were attached to Giselle and to Tom Brady, as well as Steph Curry.
Yeah.
Sam himself had been everywhere. He was the face of crypto in the US. So to see that chain of events take place, and a week later to find out that a company valued at extraordinary valuations had gone bankrupt
Hmm.
and didn't have cash to meet their obligations is really, really quite extraordinary.
Yeah. Really. Yeah. I read that about Tom Brady. Like he had $45 million invested into, was it Bitcoin?
Well, I mean, that's the thing is that unpacking what is crypto,
Hmm.
what people own, was FTX crypto, is it DeFi?
Hmm.
That's the hard part here, because these assets aren't a monolith. They're not one thing.
Right.
They all have different things, and they're all technology assets. At the end of the day, they're code, they're
Right.
software, right? They're not little treats that you get for using Doge. Like Doge isn't, you know what I mean? Like it's real code. It has a real, it's basically a blockchain. It's a ledger
Right.
for the most part with Bitcoin. But did Tom own Bitcoin? I don't know. I
Hmm.
know that he had invested into the company that is FTX. Like FTX is a
Hmm.
company.
Right.
It's a legal company. I believe it's incorporated in the Bahamas,
Hmm. Okay.
and it operates an exchange.
Right.
Like all companies who operate exchanges do, it's operating in the US market, it's operating in the global market. It has to do KYC. It has to meet certain obligations and rules from the CFTC as well as the SEC to be able to meet those to meet those mandates. And FTX was operating and trading under all that assumption. Um,
Hmm.
yeah.
Okay. So what do you make of, because I see this comment a lot over the past few days, the accusation of this just being a pyramid scheme that has proven itself as so. What's your take on that perspective?
Well, it was.
Yeah.
Yeah, it was. Now, what was its end goal is something that we want to explore a little bit more of today, and the associations of Sam Bankman-Fried, his connections to being a political contributor. What does that mean for political parties? What does that mean for campaign finance laws? What
Right.
does that mean in general? His association with the World Economic Forum. We're here to unpack that today.
Mm.
But it was a Ponzi,
Hmm.
which, Ponzi schemes, pyramid schemes happen all the time, Brandon.
Yeah.
Some would argue that fractional reserve lending and banking in itself is a Ponzi.
Yeah.
Like, answer this question right now. Do you believe that the Bank of Montreal, my bank, right?
Yeah.
Let's say we'll take the Bank of Montreal Exmouth branch, which is my branch. Do they have enough funds on hand to meet customer obligations if all customers came in today and wanted to withdraw their money?
Heck no.
No, they don't, right? And that's why over the years, the governments of the developed countries and in undeveloped countries as well have placed rules on what you can and can't do as far as your banking. how much
Right.
you're allowed to transact in one limit, how much you're allowed to e-transfer. These
Mm.
are all limits to ensure not your security and safety of funds. It's to ensure that banks can continue to do what it is that they do and what they're profitable in doing, and that is taking your money and then lending it out and hedging their risks with it.
Right.
Yeah. And in DeFi and in cryptocurrency, there isn't, there are not those rules available,
Hmm.
and part of what makes that very, I guess you could say, exciting for someone like me is that that is real, I guess you could say real responsibility once more.
Yeah.
The responsibility to know what it is that you're getting into, what you're investing into, what your products are, as well as it's the freedom of being able to move and do things at your speed and not have to ask permission and follow the rules that the banks have put on you. And yes, they've put on rules to protect investors, to protect depositors, but those rules are also in place to protect their interests.
Right.
And we believe in the DeFi community that we could do better. We can
Mm.
do better. To borrow a phrase from one of my mentors in DeFi, Noah Seidman, is "we can do better." And
Mm.
that's why I wanted to discuss this right away, because now that we've gotten about 12 minutes into the show here, and some people are joining the chat, this is not a cryptocurrency problem that happened
Mm.
this is a traditional finance problem.
Right.
Sam Bankman Fried, Alameda Research, and FTX are traditional finance. They're the same banksters and fraudsters and all the evil people that we've been struggling against for decades, since 1930s and Jekyll Island.
Hmm.
They are the system, and that is what DeFi and cryptocurrency, specifically with what Satoshi did with the white paper, set about to move away from, is custody with an institution, custody with another enterprise, removing humans from the frailties within the system that can cause the type of stuff that we're seeing today, and that's billions lost within a tweet.
That's insane. Yeah. And that's what I've been hearing, the concern. Hi, Lynn, by the way. She says, "Hi, guys.
Hi, Lynn.
Big heart. Good to see you." But I forget what I think it was, MSNBC, one of the hosts were talking of how because there's no safety net under cryptocurrencies, whereas um, like our other means of producing cash, on the, what's the other side of it called? I'm blanking. Not crypto, but
Commodities.
traditional ways of getting money, producing cash, where there is this sense of security, where there is this, if something bad happens, there's something to catch them. And that's what he was kind of highlighting, that crypto doesn't have that safety net. What's your
Right.
thoughts on that?
So if we could get into discussing that right now, but let's do a little theory. Let's do a little
Sure.
theory first off, and let's make sure that we understand and that the reason why we're here. Number one, this is not a cryptocurrency problem.
Correct.
This
Yeah.
is a centralized exchange that ran itself like a bank, and that
Mm,
bank ran itself like a Ponzi. And this has happened over and over and over again within financial markets.
right.
Okay. Now, let's set aside the conspiracies for the 30-minute mark at the very least. Okay. Let's get into the juicy stuff later.
Yeah.
Let's just look at it like that. This is not, yes, this is about cryptocurrency, digital assets, DeFi, and coin, but this is about a centralized legal business that operates within the United States. And go ahead, Brandon, and throw up the organizational chart right now that we have that shows the legal structure for FTX.
Sure.
And then once you get that up, I'll explain what I mean. So this is, can you close that? Wait.
Is that the right one?
Yeah. Can you close that though?
Yeah.
Are those your photos at the bottom?
I'm not seeing what you're seeing. 1 second. Oh yeah, that's just my library on Facebook.
Okay, good enough.
Yeah. Here, let me expand it a little more.
Yeah, go ahead and expand that. Like open it up and make it the full screen. Sorry, I didn't mean close it. I meant make it large because obviously the reason why I wanted to show everyone this is that everyone says, "Oh, crypto's not regulated," and we have to go after crypto. Well, listen, does that look like unregulated to you?
Here, let me make it bigger for you.
The legal structure to avoid taxes in that instance is akin to what you would see at every major Fortune 500 company operating in the world. That is a serious tax structure right there. That's all that's for, is to facilitate cross-border transactions where people can get paid their money and reduce tax impact. That's not created because of crypto. That's not created because Sam and the team at Alameda, as well as FTX, wanted to, look cool. That is to minimize how much money is going to the government.
Hmm.
So this is not some Dogecoin server where it's in a dark, dusty room in the middle of Latvia or some Eastern former Soviet bloc country. This is a sophisticated organization that was put together to fraud people. And
Yeah.
that's what we'll get into eventually. This is now why and what's the end goal. But this is a sophisticated organization, and Sam Bankman-Fried is not responsible for this. He did not put this together, okay?
Right.
Now, let's move on to the next photo, and that's the chart. Go ahead and throw So this is sort of the relationship between Sam and some very key people within the United States government, as well as with people who can facilitate organizational charts like that. So Sam, can you expand that, Brandon?
As close as I can get.
The closer you can get. So this shows Sam's relationships through family and friendships with Gary Gensler, who's the SEC chairman, as well as, I need to just, I'm just going to go back to my notes here so that I can read it because it's just a little small. I want to make sure.
Yeah.
As well as Glenn Ellison, which is the father of Caroline Ellison, who's another player in this because it's not just FTX and Alameda, it's Caroline Capital as well. It shows their different relationships. And Glenn Ellison is an expert in treaties and tax law and tax havens and tax structuring. He's a Stanford law professor, as well as Sam's mother. They're both law professors at Stanford. And this organizational chart, if we go back to that, okay, I want to show these two things to show people that this is not a dusty crypto issue.
Right.
This is very sophisticated, high level, with many players involved type organization that was designed to possibly become the greatest crypto exchange in the market, okay? But also, too, it was used to fraud people in the same way that Bernie Madoff did, and the same way that the savings and loans, and the same way that banksters and Wall Street people took advantage of CDs and mortgage-backed securities. It all became a big scam and a big Ponzi.
Right.
So I'll pause right there, have a drink of coffee, and we can sort of regroup.
Right on. Yeah. I haven't delved into this stuff, so I'm learning as we go here.
So go back to Lynn's comment there. We can pick up from Lynn.
Lynn says, I don't understand crypto at all, but even I know it's not a crypto issue. The guy who owned FTX is a total weirdo.
Yeah. Well, it's not a crypto issue. It's a traditional US company structure, fraud involving people's money that dealt in the commodity of crypto.
Right.
Okay. So that's the issue is how do regulators in the United States regulate something that doesn't is censorship resistant. For example, you can't censor Ethereum.
Hmm.
It's censorless, it's immutable, it's permissionless, and it's completely transparent. You can't stop it. Now, you can stop the front ends, the websites, and that's some of the things that have been talked about, but you can run your own node. You can trade directly on Ethereum. You don't need the help of any US regulator. You don't need that. And they know that with VPNs, they can't stop you from engaging in this. So
Hmm.
what they need to do is be able to regulate the front ends. And the front ends traditionally are centralized exchanges that, for lack of a better term, normies
Right.
use. Many people use Binance, many people use FTX as well as Coinbase to do their crypto trading. And they think, well, we're trading crypto. I can tell you this, that's not engaging in blockchain. That's not engaging in cryptocurrency the way
Mhm.
uh, myself and the people that taught me how to use it do it. Um, and that's why you hear things like not your keys, not your coins. You hear things like self custody and things like that. And
Yeah.
that's because you don't own those coins. Just like the funds in your bank account right now, you do not own them. The bank does. And they can put a hold on your funds because of your actions. You speak out against the man too much, or do something that our man Thomas Fisher would be up in arms about.
Yeah.
And the next thing you know, your funds are frozen, right? So, but yeah, I wanted to
Yeah.
show this org chart because this shows a high level of sophistication. And
Yeah.
ask yourself a question, and go ahead and put that picture of Sam. Go ahead and put that picture of Sam up there. Yeah. Does this kid really have the wherewithal to set that up?
No.
No. Right now, fine. He might be one of them, autistic MIT kids who are brilliant and they understand the numbers and they're weird and they talk funny and they do weird stuff. But look at the photo. You see the hair, you see the crazy eyes, you see the kind of vegan dumpy body. There's no muscle structure there. There's weird looking shoes that are dirty. It's all a marketing ploy. He was the front man.
Right.
He was the front man. This is
Hmm.
not Sam's show, everyone. This is not Sam and Caroline. They were 20-year-old kids. They popped up on the scene all of a sudden, right around 2020. There were nobodies, people who had been in cryptocurrency for a really, really long, long time, didn't even know who these guys were. They popped up on the scene and they're like, oh, well, we've got all this money and we can guarantee returns and invest with us because we're going to, do this. And next thing you know, we've got our fall guy, which
Yeah.
every major calamity needs a fall guy.
Yeah.
Now, the question is why do we need this fall guy? Do we need it so that we can institute sweeping regulation that puts cryptocurrency under the thumb of the United States government financial infrastructure? Perhaps.
Hmm.
But did we need this to further control and draconian measures and freedoms in our life? Perhaps. So the question is what was this triggered for, and was it triggered on purpose?
Hmm. Yeah, that's a good question. And did you want to kind of dive into like more specifically this guy's leanings?
Yeah, I don't think we should keep burying that. I think we
No?
should bring that out right now. So Sam, and if you guys could search this, everyone in the comments, you could search it. Sam is the number 2 ranking donator to the Democratic National Party. So he donated about 50 million US dollars for the recent midterm campaign. That's on record. That is something that we know. That's a fact. We can't, public donations. You have to have a good accounting of those. And he's put 50 million. So he's second only to Darth Vader, George Soros himself, amongst some of our community. But George Soros is the number 1 donator, and seems to be everyone's evil guy in the United States. I've always said, look, George Soros has his way of the way the world's supposed to work.
Yeah.
He believes that the world's supposed to be a certain way, and he's willing to put his money to change it. And that's his right. He has the right to do that.
Right.
And Sam too. So, and just like the people who put money with Republicans, they have their views of how money needs to be spent in politics. But Sam, without question, has 50 million on the books for the midterms. The other question is how much do we not know about, right? Because there's a lot of dark money. There's a lot of money that gets moved around inside campaigns. You and I just did a campaign, right? I can tell you this right now. There's plenty of ways within campaigns to get support for a candidate that doesn't have to be direct donations.
Yeah.
Right? There's plenty of ways to do that. You know, so and going back to that organizational chart, you'd think people, the masterminds of people that put those charts together, Brandon,
Yeah.
would have the wherewithal to do the same thing politically. They would be able to structure investments donations to candidates that you would never see. The rabbit hole in the chase would be so deep. You'd have to go around so many corners. You would have to have a much better Google map to find where the money came from than anyone's ever created. That it wouldn't be it would be a waste of time for any judge or anyone to even look at it. So we've got 50 million on the books, but what else? And it didn't come from this evil genius.
No. And he's only, I think I looked it up, he's like 31 years old. He's a young buck.
He's a young guy.
He's my age. Len B, nothing is in my name, so the goons will have a really tough time trying to freeze anything I own, LOL. I saw that a couple days ago. He's definitely a liberal.
Yeah, he's a huge supporter of the Democratic Party. So he put 50 million in, and he was planning on spending upwards to $1 billion in the next election for the Democrats as well.
Right.
So the question is, why now? Why blow it up now? What's the gain? If he was invested so heavily in the Democrats, and by all accounts, the Democrats outperformed in the recent midterms, then why now? Why blow this cash cow up, all this money coming in? Well, who knows? Who knows? Maybe it was so mismanaged that people looked at it from, well, it raised money this time. We can always create something else in the future that's going to raise money. And let's use this opportunity to blow it up and get the regulations around cryptocurrency that we've been looking for. Right. Because there's been talk, and Sam has been the point man. Okay, Sam has been the point man for all regulations within cryptocurrency for the last 2 years. He's been the one meeting with Congress. There's plenty of photos out there of him standing with the chairman, Gary Gensler, Janet Yellen. He's the one out there with all the financial people with inside Wall Street in Washington, D.C., making sure that certain regulations get passed that favor perhaps his business, but favor more control over the industry.
Gee. Now, you said this all started with a few tweets. With all this recent confusion with Twitter and Elon taking over and this new thing about having to pay $8 for your check mark, and I've been hearing there's a lot of big companies that are now fake accounts that bought these blue check marks. So what if this just turned out to be someone just trolling this company and it caused all this?
Well, there's a bit of juiciness involved in that, and that's the fact that there's been rumors within the crypto community for quite some time that CC is the CCP. So Binance is run and organized by the Chinese Communist Party.
Yeah. And
this is part of their tit for tat cyber warfare background war with the U.S. to expose Sam's connections to the Democrat Party. So let's bring this out in the open now. Well, there's enough people in the chat that maybe they'll understand. Think about it like this: if this has been a fraud, and this is not just FTX, guys, go back to the big organizational chart. We'll use that. That's the hammer today.
Yeah, I'll go back to it here.
This is not FTX and trading fees. This is Alameda Research. So Alameda Research is basically a hedge fund for crypto. It's a private equity fund for crypto. So they invest in new stage crypto ideas and projects. They take ICO, so they take positions in initial coin offerings, and they basically dump on all their users. And Sam has been dumping on retail investors for over 2 years now. And everyone in the crypto community hates him for it. It's vitriol. No, people are happy that Sam's gone under. Now, we're very protective of DeFi. We're very protective of the industry. It was created to avoid censorship. It was created to avoid regulation and put freedom back in the user's hands. So we're very protective of that. But we're quite happy that Sam took a hit, because Sam has been the guy out there for the longest time rugging their users. And rugging is basically a term in our industry where you take the rug that people are standing on and you pull it and people
Right.
fall down. So Sam's been rugging his users through Solana, through projects on Solana, and the list is very long. For the longest time, he would go on Twitter. So basically, the way that happens is pump and dumps, right?
Yeah.
So a coin would come out, a new project in the space would come out, and it would have a little bit of momentum, and it would be promising great returns. Next thing you know, Sam would go on Twitter. He would attach either his name or Alameda Research's name to it. And then what would retail do? Oh, Sam's in this? During the bull run of 2020 and 2021, people were like, gotta get in there. Sam's in there. And then next thing you know, retail would buy up the prices. Price would go up and Sam would dump his coin. Did it over and over again, right? So it's not just the FTX money that has been lost. It's been the Alameda. It's been all of the projects that they've been associated with, all of those untold millions of dollars. So let me ask you this. Where is the mainstream media right now? Where is the mainstream media right now? And they're, oh my God, oh, the little guy with this part of the angle. They're not there. And the reason why they're not there, Brandon, is because where the money went. Has this been a tool that DNC operatives created to rug and take money away from primarily Trump supporters, right-wing conservatives, Republicans, because most of the people who use crypto lean libertarian, they lean conservative. Okay. They're not big on social issues. Has this been a way to weaken that community, take their money and invest it in their candidates? Think about how evil and how genius that is.
True.
Ultimately, Sam and his team dumped on their users, stole money, frauded the public, and spent that money with the DNC. And there's no reckoning for that within the mainstream media right now. That narrative is a no-show. It's only on select social media posts and with select Twitter people.
Wow. That's a good theory.
Yeah, well, I mean, that's not a theory. That's really what happened. I mean, Sam and FTX and that crew donated lots of money to the DNC and to the mainstream, right? We know that for sure. You know, the question is was it done intentionally to take money from a certain class, making them poorer, to make another class more powerful?
Right during the
I don't know. You know what I mean? But one can only look at it on its. I'm sending you another one here too, because this one's very important. One can only look at that. There you go.
Just gotta open it up 1 second. Yep.
Right.
Ukraine.
So one can now look deeper into the rabbit hole, and this is where I wanted to have our man Thomas Fisher in today. Hey, how's it going, Brook D Day? You know, giving me the This is where he would just jump out of his shorts. Because, and you could probably search this online right now, in the early stages of the Ukraine war, and I'm not going to call it Russia's war on Ukraine, which is the framing that I see quite often on mainstream media these days. That's how it gets framed, the language. Russia's war on Ukraine. Why can't we just call it the Ukraine war? Because words matter. Anyways, getting back to it. In the initial stages of that, Sam promised that he would divert funds from FTX to Ukraine. It's out there. You can see it. And that's the question is, was this a Ponzi? Yes. Was this a laundering operation for getting retail American money? Again, the plebs, right? People like us, the very bottom, weakening us, making us need more from the government because we have less of our own money, going to power centers within DC as well as Kiev,
Right.
right? And imagine, okay, just imagine, and I'm going to send you another one. If that was on the other shoe, let's say Trump, for example, okay? Let's say Trump was involved in this.
Yeah.
How quickly would that be on our radar screens on TV? Be on how quickly? Nanoseconds?
Yep. Instant.
Yeah, right? So this is like Lynn says, Ukraine is a proxy for global takeover. She's 100% correct. She is 100% correct. It's being used in so many different ways right now with so many different layers that this doesn't surprise me that Ukraine, FTX, the DNC, they're all wrapped up with inside of it.
Yeah.
Did you get that last one I sent to you?
No.
Okay, I'm going to send you one more here.
Okay.
Okay. So these are some art. This is an article right here. Right. So Ukraine partners with FTX Everstake to launch new crypto donation website. Right. So 1 month after the war in Ukraine started, DC puppet Zelensky partnered with SBS for crypto donations. Right. So how much of money that was donated to Ukraine actually got there? That's a fair question too, right? Because if we just look at Sam as a fraudster and as someone who just stole money, did that money even get there? Or is it more nefarious that, yet again, right, retail is being scammed by FTX, by Ukraine, by the DNC, by the regime, by the GOP who support more war, right? Because it's not just the Democrats, it's also the Republicans. It's the regime who wants this constant war, this conflict, to be able to enrich themselves. We know this has been going on forever. Is this just part of that? More scam? So there's plenty of tentacles to this. I'll step back, take a coffee, and let you reframe things, maybe grab some questions.
Yeah, Lawrence Swart, he's saying physical. If you don't hold it, you don't own it. Totally understand that. Yeah, and just Lynn saying exactly, Lawrence.
And
yes,
that's where not your keys, not your coins come into play. So there's something called a ledger or a tracer. That's basically a little USB key. I don't have it here in front of me. I've got it in my box up there in my safe, actually.
Nice.
In my box in my safe, and that holds my cold. That's my cold wallet, and that's my physical.
Right.
What's beautiful and what's always been attractive to things like Bitcoin is you can store your address directly in your head, your wallet. I know my Ethereum wallet address in my head. Right. So if I ever lost it, as well as I have my seed phrase in my head, I have it written down in my safe as well, in a deposit box in an undisclosed bank in Asia. I won't say where that is, but when it comes down to it, that's our physical in the crypto space. You don't need to actually hold physical jewelry, diamonds, gold bars anymore. You can hold physical code in your memory. And that's where things have evolved from gold. That's why Bitcoin is so attractive and why it's become the number one asset of the future, in my opinion, where I believe that Bitcoin's not a crypto a currency. We're not going to transact in it. It's an asset. It's like it's the digital gold. Michael Saylor said that this week. He was on all the shows. He's one of the biggest Bitcoin bugs out there. And he made a full. You might want to tee up that interview actually, and allow us to watch a little bit of that, Brandon.
How did I find that?
Michael Saylor.
Just on YouTube?
Yeah. Go ahead, Michael Saylor.
Yep.
Yeah. Just do Michael Saylor FTX. That would be the search.
All right. On CNBC?
Yes.
All right. Let me just cue that up here.
It is great to have you back on the program, and certainly a key time to talk to you.
Yeah.
So I want to start with what we have seen playing out in the cryptocurrency
Yep, that's it. Yep.
space more broadly this week in light of everything with FTX, the ripple effects to other assets, including the price of Bitcoin, and just get your response to what we're seeing and how it's unfolding.
I think this week highlights the virtues of Bitcoin as much as it exposes the fragility of the crypto ecosystem. Bitcoin's a commodity you can self-custody without an issuer. The vast majority of all the crypto tokens out there are unregistered securities trading on unregulated exchanges, and they're fairly centralized. And so what could go wrong? Well, we saw what could go wrong if a centralized token trading on an unregistered exchange blows up this week. I think
Pause there. Pause there.
Predicting this for a long time. Speaking.
Okay, so what Saylor means there is basically the FTT token. So that FTT token blew up.
Right.
And that was on an unregulated exchange because that was hosted in the Bahamas. And it's not regulated because of that organizational chart that I showed you earlier.
Right.
Okay, keep going.
For all the Bitcoiners, we feel like we're trapped in a dysfunctional relationship with crypto, and we want out.
So how do you get out? Does this enable it when you see a shakeout like this across the broader space?
Look, I think the industry needs to grow up, and the regulators are coming into this space. And what the world wants is it wants digital assets and digital commodities and digital securities, but there's no way to register a digital security. There's no clear guideline or roadmap for designating a digital commodity. The world wants $1 trillion of digital currency in the form of the USD stable coin. And so I think that the regulatory intervention of late has been all negative, like enforcement, but the marketplace is waiting for the regulators to say, this is how you register a digital currency. This is how you register a digital security or a digital commodity. And instead of saying all the crypto exchanges should register, we need to get the crypto exchanges registered because the future of the industry is registered digital assets trading on regulated exchanges where everyone has the investor protections they need, and the investors in general understand the difference between Bitcoin and a stable coin and a security token.
Okay, pause there.
Does this propel regulators to do that, to move?
Great. So basically, I want you to see that because I wanted people to understand that Bitcoin is not cryptocurrency. It's not what's going on here. It's totally different. You can see how Saylor, who's one of the largest holders of Bitcoin, talks about it. There's a large difference. You can trade Bitcoin on FTX, but you can also exchange Bitcoin peer-to-peer. So I don't need like some place like Binance or FTX to allow me to exchange Bitcoin with another person. I can do that whenever I want at my own leisure, right? And that's just facilitating trades and transactions. That's what a ledger does really well. That's what blockchain does really well. But when you get into investment, securities, trading, and things of that nature, absolutely, there is a need for regulation to protect people. Okay? Right. And that's what he's basically talked about. So there's been a long running argument over how much regulation crypto really needs. And it's now coming because of what happened with FTX. So that is for sure an outcome that we're going to get. But are we going to get an unwinding of all of the FTX relationships? Who set up the organizational structure? How did Sam get so close to the SEC? How was he able to, in 2 years, rise to the richest man in crypto, the next Warren Buffett? Who facilitated that? Who were behind him? Are we going to even have the discussion of where the money from FTX, Alameda, Sam, Caroline Capital, where did that go? What campaigns saw that money in the DNC? You know, was it the campaigns that tipped the scales, right? So were certain flips recently in the midterm elections, were they flipped because of fraud money, right? And what does people like Nancy Pelosi and Joe Biden and people like that have to say about those relationships?
Yeah.
Right?
Good questions. Yep.
Yeah. See, and that's where things start to get a little bit not conspiratorial, because we know, but we start to think to ourselves, so why was this created? And why was it blown up right now? Obviously, an organization that large, okay, could probably leverage some money here and there off of relationships. Hey, you know, we have a liquidity event going. We need some money, you know, these kinds of things. Can you help us out to make sure that, you know, all this crap we've done, all this funding into Ukraine and all this funding into the DNC and to candidates, so that none of it gets exposed? I'm sure that money could have been pumped in to fix the liquidity issue, but they let it go. Question is why? That's what I want to know. Why now? Why now? You know, also too, the timing of during midterms. No, I can tell you this right now. I'm a massive political junkie. Okay.
Yeah.
But for the last 2 weeks, this is what I've been following.
Right.
This hits home a lot more than me, because number one, it's crypto, which I'm very passionate about, but it also intersects with politics.
Yeah.
This was the biggest story of the year so far. Right. And that gets into a little bit of, well, what happens next?
Right.
And it's a bit of a coffee break right now. So if you want to read some questions or some of the comments, I'll take a little break.
Yeah. Lawrence Swart says, last flag standing. Russell J. Gold tells you what's really behind the flags and the grammar that gets us in these troubled times. Correctness in all our contracts and ourselves.
Correct, Lawrence. I led off the show today before you came in discussing how during the campaign, it really put a lot of emphasis in my mind of what I'm saying. It really made me double down and being careful about what words I choose, the positions I take, the questions I choose to answer, the non-voluntary responses to issues. You know, as a just a private person, we're out there, we're just volunteering our opinions on things. When you step into politics and you take a public step, you kind of start to think, oh, I don't need to volunteer that no more.
Yeah.
You know, it's automatic. And choosing the right words really matters. So I led off the show today talking about how it's nice to not be in the public eye, but considering Brandon and I's positions in the community, what it is that we're trying to do to assist charities, and the fact that we are going to remain public. I'm always going to be mindful of correctness in myself and what it is that I choose to say.
Plus, we're on YouTube, so we always got to be careful. But yeah, so what would be the process of like getting to the, like you were asking, like where did this money go, and like what's the why behind these things? What would an investigation look like, or is that even possible with?
I don't think an investigation's even going to happen. Like, why isn't Sam arrested?
Like, how do you trace this stuff? It's all
right. Like, why isn't he arrested at this point?
right.
You know, I'm going to send you another one right now.
Okay.
Okay. Here you go. Because I want to give a shout out to my mentor in the crypto space. One of my mentors. I actually have a couple, but this was my first mentor. And also just one of my bros. I love the guy. We met in Singapore. We met randomly in Singapore through a friend of mine. We were there for a music conference, and we went to a studio to songwrite, and we wrote a really great song together, and we've been friends ever since 2013. He eventually moved to Taiwan. We spent some time together in Taiwan. He's in China now, but he's the one who introduced me to crypto, using DeFi, using things the right way. There's a lot of late nights with him and I eating instant noodles, ramen noodles, trading during the bull market. So my friend Hua Chang Li, this is him calling out Sam in 2020. So this was October 19th, 2020. And this is a typical post of Sam pumping and dumping. So basically, he just said, oh, I talked to these guys over here at this protocol, kind of liked it. People in the crypto space would see this tweet and they would automatically go and find that protocol and buy it, driving up the price. And this is my friend in 2020 calling Sam out for price pumping. This has been happening to retail for over 2 years.
Right.
Untold billions of dollars have come in because they have receipts for over 12 billion on the year. They had 12 billion in assets on their balance sheet, 12.8, I believe. They also had like 7.2 in liabilities, and there was some question about what it was valued in, et cetera. Mostly valued in their stablecoin FTT. I won't get into that because that's high level stuff. But they had brought in $12 billion. Where did that all go? That's the question is where did our money go? So, and then taking another step into this, we realized this week, and anyone who's been following me and understanding some of the things that I'm passionate about is that we're in a pension crisis. Public and private pensions do not have the liquidity to meet obligations. I've talked about this ad nauseum. Anyone who wants to do a Google search can do so and find plenty of YouTube videos as well as articles that explain why and the difficulties that are resulting in possible pension funds going bankrupt. We already see in the UK where they had to stop quantitative restart quantitative easing so that they can meet their obligations in their pension funds. And you're going to be seeing more of that. It's just going to happen. Part of it was a demographics problem. Part of it was a poor planning and structuring problem. And then part of it was just a straight greed and graft problem. So think about it like this. Pension funds, they promised all this stuff to their unions, to their members. There was obligations that were promised. And then they found out that the baby boom generation just was far, far bigger than Gen X, Gen Z, millennials. And then they were like, crap, how are we going to get in the funding that it takes to meet these obligations? And then they saw their workforces decrease. So their contributions decreased because of that. Workforces were offshored into developing countries like Indonesia, Cambodia, China, et cetera. Now there's no contributions. So where do they turn to? They turn to Wall Street. Wall Street executives, private equity, venture capitals promised, well, don't worry, we can outperform that 5-6% that you're sort of behind over the next decade. We can make up for that with our great trading, our really talented young individuals coming out of Harvard, MIT. Don't worry. But we're learning over and over again that those people have basically socialized the risk and taken the upside for themselves. This is another example of that because we found out this week, once more, that the Ontario Teachers Pension Fund, which is one of the world's largest institutional pension funds, was directly invested with cash into FTX. Now, the reason why I was very specific with cash is you had some not back and forth, but you had asked your financial man about, the exposure and things like that. And he had mentioned that, well, 95 million is not too much money compared to how much the portfolio is for Ontario Teachers Pension Fund, but it's 95 million in cash dollars.
Yeah.
And so let me step back for a minute and say, if Elon Musk, I don't know how much Elon Musk is worth. Let's say he's worth, I think he was like 120 billion, right? His worth was 120 billion, right? I think that's what he was worth when the Twitter purchase. Oh, people think, well, he's going to buy it for 43. Just go to his bank and grab 43 billion. That's not how money works. He's worth 120 billion, and that's probably that's a total valuation, and that's the same thing with the Ontario Teachers Pension Fund. They're worth 250 billion at present valuation. So that's the present valuation of their commodities, their assets, their real estate holdings, and all of that. What happens when the price of those decrease, which we've seen this year? So a drawdown in asset prices. what happens? Well, to meet their obligations once more, they need to have liquidity. They need to have cash, dollars, to be able to pay their members their retirement plans, their benefits, their unemployment insurance, and everything like that, their disability payments, etc. Those require cash, not assets. So it doesn't matter. Like I'm worth X amount of dollars because I own property. But I have to liquidate that property to be able to pay you something if I need to pay you.
Mm-hmm.
And $95 million is nothing to sneeze at in cash. When Elon is out there, basically, I don't know how much he contributed from his own cash reserves, but he had to sell Tesla stock to raise the money.
Yeah.
But what if that Tesla stock becomes illiquid? Which means he can't sell it. And that's part of like what I want to talk about next is where does this domino lead us? We've already seen another large crypto exchange, crypto.com, pause withdrawals. Now, I haven't checked Twitter this morning because I've been busy all morning, but is it still paused? Because if it is, that means they're going through another liquidity event. And that's where liquidity has gone for the last 2 years. It's gone to the crypto markets. It's experienced the most uptake in asset prices.
Right.
So I mean, dollars and money has flocked to digital assets, crypto. Of course, it went to real estate, but the big increases were in crypto. So all that loose money is there. And if you've got places like the Ontario Teachers Pension Fund, a gold standard, premium, world-class pension fund, investing into FTX, how many other pension funds, private union groups, banks have invested into crypto? Because I told you this at breakfast. All these guys talk. They all hang out. They all go to the same parties. If they find out a whale like the Ontario Teachers Pension Fund is invested in, say, FTX, but you don't think the Leuna Fund or another fund out there might be like, ooh, maybe we should take a dip in the water? You know, not saying that they did. I'm just saying this is the thoughts that go on. And this is why I'm concerned with FTX causing a liquidity event in the markets so that all of this leverage that's been built up, because we hear about it all the time, you know, people have gone out and they've borrowed against their house and they've bought an extra property to be able to Airbnb. Once the money, the blood in the system freezes, it doesn't matter what your asset value is. It stops living. So all these dollars that were lost, they matter. And it's one domino after another domino after another domino. And that's what we're facing right now. That's why I believe this is the biggest story out there. It's bigger than the midterm elections. It is bigger than all of it. And I've already seen enough people call this the Lehman event.
Yeah, the first domino to fall.
Well, it's not the first because there's been quite a few crypto projects go belly up this year that were large. We had Luna. We had Three Arrows Capital. These are large events that have already happened. So the entire crypto space has been imploding this year. And Luna was a real crypto project. It was a DeFi project. It wasn't what we're seeing with FTX. It was
right.
It was a complete failure.
Yeah.
Yeah.
I'm just reading the email that I was chatting with my financial advisor. Something interesting he said. Let me get your thoughts on this. He said, if anything, I believe the FTX situation bolsters conventional markets and that it scares people away from unregulated investment vehicles like crypto and into more diversified and balanced approaches.
I agree and disagree. I'm going to tell you this right now.
Yeah.
I had a Coinbase account when I was in Taiwan, but once they wanted extra KYC, I wasn't able to deliver that because I wasn't living in North America. I wasn't able to interact with them, so I let it freeze. I activated it 2 days ago because I see this as a bolstering of DeFi. I see this event as being an opportunity for people who truly understand DeFi, smart contracts, censorship resistant blockchain technology, as being a great opportunity. So there's the sharps on my side who see that opportunity, but there's also the people who are scared, the fearful, and they're going to exit from crypto, and they already are. You know, if I can just look at my CoinGecko right now, market's ticked up a little bit. Yeah, market's ticked up overnight. So something like Chainlink was down to $5.72. It's up to about 6.20 right now. So it ticked up overnight, but it's been sort of trading in that range for about 6 months now because we're in this perma bear. I can say this: the great thing about cryptocurrency is because it's not regulated, it corrects faster. So you get that free market capitalist speed that we're always, you know, looking for, the freedom, right?
Yeah.
The market sort of self-regulates and corrects itself. And we've seen that. Bitcoin has outperformed this year, you know, all the other asset classes. Bitcoin has outperformed.
Yeah.
Everyone's done poorly, right? So if you, there is two sides to that coin. Most of the people that I'm talking to within the space are either extremely bullish because it further strengthens the case for decentralized finance.
Right.
FTX is not decentralized finance. It's traditional finance. Once more, moonlighting as cryptocurrency. And then there's the retail investors that don't know any better and they're just going to leave. So he has a good take there in a way. It's a solid take. And that's the thing with people's money is there's lots of options for you to invest in. But at the end of the day, this has created a liquidity event inside the system of which we are finding out traditional, large, premium, gold standard players are involved in. You know, we were told that, oh, well, you know, it's not regulated and certain entities, they didn't really go there, you know, because it was too high risk. That just got blown up.
Yep. Lynn says, Brooke, you only disagree with Brandon's advisor because you understand and use crypto. For those of us who are clueless, this FTX collapse is terrifying.
Agreed. And that's the distinction, right? Yeah. So you have the people, okay, so you have the people like myself who've been using decentralized finance for the last 5 years. And you have the people who entered into crypto during the bull run, who are really excited about it because they had chances to make life-changing money if they hit it big. There's a difference in us two investors, right? I don't look to decentralized finance to make myself rich overnight. I look at decentralized finance to beat interest rates at the bank. I can put my money in the bank and make 1%, or I can put my money at Curve Finance or MakerDAO, or I could deposit my money with something a little bit more risky like Abracadabra, you know, or something like that. And I could make 6-7% on my deposit, right? And these are protocols that have not stopped making blocks. They've not screwed up. They've never been hacked. There's been no exploits. There's no cheating. There's no humans are involved in this. It's just ledger trading. It's there. And I'm more than happy to continue using that now because I trust it more. See, for me, I look at it as a situation, Lynn, where, well, why would I keep my coins on anything that the government's involved with, that a human's involved with? Because they're going to rob me. Ethereum is blockchain. There's no humans involved. They can't freeze your money. They can't choke your money.
Right.
Decentralization is the future. That's what I believe. So I know the difference. But I also understand your point is that many don't. So they're going to exit from the crypto pool. And that's fine. They will. But you know what? Mt. Gox happened too. And when Mt. Gox happened, that was the end of it for Bitcoin. Well, Bitcoin hit 66,000 almost a year and a week ago today. So 66,000, or were they up to like 69? I think it was like 66.9 or something. So it did make a comeback. This is a very resilient industry. People look for the ease of use and user experience in cryptos is like no other. So I agree with that. That's why I agreed with, I agreed but disagreed with Brandon's financial guy.
Yeah.
Yeah.
So obviously now you're saying knowledge is power here. Do you have any YouTube channels that you recommend or just any sources? Yeah.
Absolutely. Coin Bureau.
Coin
Bureau is a great introduction Well, it's a great daily show for crypto.
Yeah.
Might be a little higher level, but what Guy has done is he's broken down every protocol, so you can subscribe to Coin Bureau
Right.
on YouTube, and you can go look at past videos where he introduces every protocol, every why it's good. I would say getting on cryptocurrency and understanding it. There are some really great Twitter people out there. Again, this is a very anonymous space. These are not real people names that are out there. So that's another thing that scares people is that why would I listen to somebody who's anonymous, right?
Mm.
And the reason why we do that is because anonymous, we choose people in our lives to follow anonymous people out of the veracity of their ideas and their strength of their arguments, not because of their cult of personality. That's what makes crypto a little bit unique.
Gotcha.
But I do want to, before we close out today's show, I do want to get back to the fact that the Ontario Teachers Pension Fund was 96 million committed into this funding round at FTX and what that really means going forward. And who will we find out next was involved in crypto projects. That's going to be the big thing. We already found out all the bigs like Tom Brady, Stephen Curry, Ontario Teachers Pension Fund. Who next? Now, of course, FTX is the biggest of the big, right? They're perhaps the biggest. But what about all the little fish out there?
Yeah, it'll be interesting to find out.
It will. So let me send you, before we close this out, in a homage to our man and his new channel, Cognitive Disturbance. Our homage to our man Thomas Fisher. I just wanted to make sure we did the obligatory World Economic Forum relationship post.
Let me see if I can make this bigger.
Right. So here we see FTX associated with, once again, the World Economic Forum. And as I've digested this and been on the group chats with my friends and tried to figure out, like, the question is why now? Why now? Right?
Yeah.
Like I look at that organizational chart and say, no way Sam did this on his own. Get out of here with that. We're not having a Lee Harvey Oswald moment where we blame one guy for shooting John Kennedy. That's not going to work with me. No one guy does what he's done. He's had help. He's had government help. He's had intelligence services help. He's had the man behind the man help. And of course, he's related here, once again, to the World Economic Forum. Same players, right? The same people over and over again, Brandon. Here's another one. Here comes another one you can post on the screen.
All right.
Right? Over and over again, the same guys, the same people that we always see, right? Here he is at a World Economic Forum event with everyone's favorite Democrat politician, Bill Clinton, right? There, actually, in the frame, there's another photo I have. He's sitting beside Tony Blair, right? And these guys are pitchmen for the Liberal Atlanticist group, right? The Liberal Atlantic New World Order group that basically are the American faction of the belief of the World Economic Forum. We know this. They're on that team. Again, this isn't some in the quiet conspiracy. This has never been a conspiracy. They're out there in the open. They believe that the world should be a certain way. They're all on the same team. So obviously they were using FTX to fundraise. Did they think that FTX, like, did Sam screw up FTX so much they had to hit the implosion button and use him as a patsy? Or did FTX serve its purpose and they didn't need it no more? Like, or what comes next? Is did they create FTX knowing that, okay, great, we can scam all these retail crypto kids who think it's to the moon and we're going to be rich. I'm going to grow my bags and I'm going to have the fattest stack ever. We're going to scam all these people, right? And then we're going to use the implosion of that to create new crypto regulation so that no one can get involved in banking, so that we can end this decentralized finance idea and hold down our banking monopoly forever?
Mm-mm.
I mean, these are the thoughts that have gone through my head in the last week.
Yeah.
And of course, how to benefit Sarnia charities are also on my mind quite a bit. We're trying to benefit the local charities and come up with cool ideas. But these are the thoughts that are going through my head, and it's much more important for me to think about these than the midterm elections, because the midterm elections are downstream for these issues.
Yeah.
They are.
Yeah, I see that. Wonderful. Well, this was educational, to say the least.
Why don't you spit it back to me? How do you understand it? Let me see if I explained it.
Oh my goodness. See, it's something that's why I asked you for those resources, because I got to sit down and just understand the functions. I want to look at that spreadsheet more, try to understand just how this clock is built. So I think there's a lot of moving parts that I just need to understand. But what you're saying does make sense. And it helps when you use analogies that I understand. So,
Right. Like, think about it this way, Brandon.
Yeah.
Is it even possible with the way Main Street media tickers like CNBC and CNN and Fox News, it's impossible to break down really what's going on in this story.
Yeah.
They can't. They don't have the time. You need podcasts. You need streams. You need alternative media, right?
Yeah.
And that's the thing, is people still are in a headspace where if it's not on the TV, it's not real news.
Yeah.
It could be fake news, or it could be misinformation or disinformation.
Right.
So we're still in that situation.
Yep. Agreed.
Right? It's incredible. So you need deep dives like this. You need deep dives. I'm sure that's going to happen on Joe Rogan, right? And I found out that Michael Lewis was in the process of writing a book. Michael Lewis was in the process of writing a book with FTX.
Interesting.
It just so happened that Michael Lewis has been able to write books on all the major financial crises in the last 2 decades now. Good timing?
Yeah, there's a lot that stinks, that's for sure.
Yeah. There's a lot. There's a lot that has my BS detector going crazy right now.
Yeah.
Once you get skeptical of people, it's impossible to go back.
I know.
You know what I mean? It's impossible. You always think, well, and that's why I try to tell people that in my time in Asia taught me one thing that's really important is trust. Counterparty risk, trust. Trusting that the other person's not there to scam you. I used to think to myself, gosh, that's all my staff. That's all my other managers, my bosses. Everyone ever thinks about is being scammed.
Yeah.
Why don't we think about building cool things and ideas and doing stuff? And I came to understand that making sure you don't get scammed is the most important thing in business.
Yeah.
I really did understand that at the end. So I look at everything from a very skeptical point of view and try to work back and try to establish some form of trust. Yeah. That's why I love DeFi the way I do.
Yeah. Just kind of hanging out with you. You're kind of brushing off on me. You said something a couple of weeks ago, just follow the money, because it's kind of like a crystal ball. So I think I need to immerse myself more in the financial world of things.
Yeah, money. It's always money.
Always the money.
It's always the money. It's what we fight for. It's the world's scoreboard.
Yeah.
Not everyone's an athlete. Not everyone lived life by putting points on a scoreboard or getting scores by a judge. We all live by a certain scoreboard.
The root of evil.
Yeah, that is.
Right on. Well, thank you, Brooke. Appreciate you stopping by and explaining this all.
Yeah, so let me take a minute to plug that. So this Wednesday, we're getting back on the horse with Serious for Sarnia live streams. So I'll be sitting here once more, broadcasting live. 8 o'clock Wednesdays, 8 p.m. That's the time. we'll primarily be covering Sarnia politics, but we'll cover macro events like this, talk briefly about that, and let people weigh in.
Yeah.
And we'll be back pretty regularly now. Monday, I'll be back regularly Monday. Probably couple times a month is pretty much what I'm shooting for, to be here to talk about this. But obviously, a big event like this will have me in the seat for sure.
Yeah.
But yeah, starting again this Wednesday. So, Serious for Sarnia, my campaign, we transition into an organization called Serious for Sarnia, where our job primarily is to bring juice, ideas, and energy to existing charity organizations, to use our marketing chops, our idea and content generation chops to help bolster their already existing efforts with it in mind, to help grow the donations and impact into their charities. So far, we've reached quite a few people have reached out to us. They want us to help them, and we're excited to be in the driver's seat to do that. And then we will continue to think of our own ideas, our own initiatives, and how we want to do our things. But that will evolve over time. Brandon and I are working really hard on what it is that we're going to be doing. Obviously, there's always a need for support. So if anyone would like to support, the best way to do that is to like, share, comment, and subscribe to our videos. Bolstering our social media presence always improves our influence in the community. But you can do so too by using the PayPal link and making a small donation. It doesn't have to be a big one. And in the future, I think Brandon and I are going to be using the super chat functions, and people will be able to do $1.99, $2.99 during the super chats and be able to ask us questions. But that is as we roll up and get better. But yeah, we're looking for support, absolutely, because we do have big things planned here in our community.
Yes, sir. Well said. Thank you, guys. Thank you, Lynn.
What did Lynn say there?
She says, Brooke, you need to get serious for Alberta. My kidnapping plans are still on the burner here.
Well, Alberta seems to be the hottest place in the country right now, so I don't think they need me. I think they have Danielle Smith out there, and she seems to be a darling of the libertarian right and someone that we like quite a bit here. And so you're in good hands right now, Lynn, actually. But maybe perhaps you could let us know. Please go ahead on this one.
Yeah, this is her. Just please please know that YouTube takes 30% of all donations. We are not government sponsored. Every dollar helps. And she links our link for us. We appreciate you, Lynn. Thank you for doing that all the time. That
hurts so much. 30% of all donations hurts. That is such a large fee.
Yeah, that's through super chats and everything. They take a chunk.
That is such a large fee. Let me get closer to the camera and say this. I can't believe it's 30%. That hurts so much.
Yeah.
Really. Think about all 30%. That's a big chunk. It should be 3.
Yeah.
Okay. Anyways, please don't let that deter you. 70% of $1 is better than 0%.
That's right. I agree.
All right, guys.
All right.
Great hanging with you today, Brandon.
You too, sir. Thanks, everyone. All right.
Bye-bye.